The following tutorial is going to take you through how to draw disclosures and how to draw disclosures specifically for a conventional loan that's below 80% loan to value. So we'll walk through the actual application itself, things that you need to be looking for, things that must be completed, as well as the actual process for drawing these disclosures, and what happens if certain things are not correct on the application and how you can go about getting them corrected. So when you do know which customer you're going to be drawing disclosures on, you'll just locate that in customer in Encompass and open up that loan file. Now, once that loan file is open, there's several key things that you want to look for right away. So the first thing that you're going to do is you're going to go up here to the log section, and you should see on every file two minimum things. One should be a log comment for disclosures. Another one should be that there should be a pre-HUD that has been received into the file so that you can check those costs. When you actually click on the disclosures, which is one of the first things you should do, you should have a comment in there from the mortgage banker describing exactly what should be going on with this file. So this example, please draw disclosures for a 30-year loan at 4% interest rate, below 80% loan to value. The reason that we really want to focus on deals that are below 80% loan to value at this point in time is there's no mortgage insurance that's involved on those. So it makes it a little bit easier of a document set to draw from a compliance standpoint. The other main thing that you need to see in this log comment should be how the document should be delivered to the borrower. Most of the time, it's just going to be the mortgage banker delivering them themselves, either via scan and email or U.S. mail, overnight mail, FedEx. But sometimes there's unique situations that need to be addressed. But the main thing is just making sure you know exactly how those documents should be delivered. So in this example, documents will be sent to the borrower via scan and email. Customer is planning on bringing no money to closing. So we're just going to go down here and hit close so we know exactly what's going on. They're going to be scanned and emailed to the borrower. First thing that you're going to do is down here in this lower form section, you're going to click on Borrower Summary Origination, and we're going to walk through this application to make sure everything is correct. Everything that needs to be updated has been updated so that the application can have documents drawn. First thing that you're going to want to do is when you go into this Borrower Summary Origination page, in the upper right hand corner you'll see Application Date. You always want to make sure that that is the date that you're drawing the disclosures. So today is March 15th, so today's application date, March 15th, 2013. You will then scroll down in the application, making sure that all the information is filled out, that there's no glaring mistakes. There's no missing date of birth, social security numbers, things like that, and all the blue fields are filled out. So as we go down, we can see that present address is completed. Customer has no previous address because they've been in the house for 5 years. This example is a test loan, so you will not see credit scores. But one thing that you want to make sure of is that you do have 3 credit scores for each borrower on the application. Since this one does not have credit because it's a fake application, there's no credit. But one of the things that you want to make sure of is that all 3 reports have been pulled for each borrower prior disclosures being drawn. So you should have 3 credit scores for each borrower at this point. As we scroll down, when you're drawing disclosures, you should have the subject property address listed here, as well as an estimated value and an appraised value. So in this example, $275,000. And these values will need to match the values on another screen. So for your first couple document sets, it might make sense just to write down which value they have listed here, but a value does need to be listed on both of those. There also needs to be a loan program selected and a closing cost program selected. Because it's a conventional loan, you should have conforming fixed filled out, whether it's a 15 or a 30-year term. And then conventional closing cost should be filled out as well. So you should have both of those blue fields filled out with conventional and conventional standard, and then just the difference in term, whether it's 30 or 15 years. As we go down, purpose of loan, property will be, loan type, lien position, all of these sections here should be filled out with what we're doing. You'll want to double check and make sure if this is a primary home or a secondary home or an investment. You're going to want to make sure you know what type of loan it is that we're doing. Most of the time, it will be a primary residence, but sometimes you will have to draw documents on a secondary or an investment property, and we'll want to make sure that that matches up with the rest of the application. Loan type will always be conventional, since you're drawing a conventional loan set. Lien position should always be first mortgage, and you should only be drawing disclosures on fixed rate loans. If it's an adjustable rate loan, that'll be something that a separate training will be delivered on. As we now scroll down, you will need to make sure that there is a loan amount as well as a closing date, and then interest rates and terms. Your note rate and your qualifying rate should match, and your term and due in should match. The next main thing on this screen that you'll need to do is down here, last rate set date should be today's date as well. So we'll want to select that as being March 15th, 2013. So whatever day you're drawing the disclosures is the date that you want for the last rate set date. So the date in the upper right hand section of this first page and the last rate set date should both be the date you're actually drawing those disclosures. So today, March 15th, 2013, is for both of those. Next, we're just going to move right down here to 1003 page 1 and move to the next page in the application. As we look, typically, if the customer is married, this top box will be checked. If they are unmarried or there's nobody else on the application, the bottom box is checked. So in this example, Jonathan and Jane Test are married, so this top box is checked. The remaining information on here, a lot of it will be filled out or is defaulted from the previous page. Making sure that the number of units is correct. 1975 is when the home was built. Making sure you do have accurate information in there. As we go down, the year the house was acquired and the original cost, existing lien should all be filled out and pre-populated, as well as purpose of refinance. This drop-down menu will need to be selected. If it's a rate term refinance, it's no cash out rate term. If the customer is receiving cash out or we are paying off a second mortgage, it would be cash out other. So it's either going to be no cash out rate term or cash out other. In this example, there's no cash out to the borrower, so it's going to be no cash out rate term refinance. Both borrowers should be listed here on title will be held in names, and if there's two people, joint tenants should be selected. If it's a single man or a single woman or a married man or a married woman, you might use those options. But typically, if there's two people on the application, it's going to be joint tenants or single man, single woman. In this example, it'll be joint tenants. And then in source of down payment, 9 times out of 10, you're going to select the option for equity on subject property. As we continue to scroll down, we want to make sure that if the customer has dependents, we have the ages listed in there. So dependents and ages. Present address should still match what the customer's current living address is. And if the present address is the same as the mailing address, you want to make sure that you check that box there. 9 times out of 10, the mailing address and the present address are the same, unless there's like a P.O. box or something like that, which should be detailed in your log comments. Otherwise, just make sure to check that box for mailing address, same as present, if it hasn't been done so already. As we continue to scroll down, the customer should have this entire section filled out with employment information. If some of this information is missing, that isn't necessarily something that you send back to the loan officer to complete, but it is something that you preferably would want to have completed. At least bare minimum, the blue section should be filled out, as well as the position that the customer holds. Next, we move to page 2. On page 2, you should have income for any of the borrowers that have employment from the previous page. Under monthly housing expenses, the present housing expense right here will be the customer's first mortgage payment that we're paying off, and then the proposed payment is our payment. You will need to make sure that there is a hazard insurance amount and a real estate taxes amount listed here. If not, that is something that you would need to send back to the loan officer to get accurate information for and input into the file. If there is a no log comment in the file, like we described in the beginning up here, or if there's no pre-HUD received tab here, or at this point, if there's no taxes or insurance listed here, you would just want to email that loan officer back, let them know that that information is missing, and that they need to advise you when it is completed so that you can finish the document set. As we continue to scroll down, there should be a value that automatically populates here under real estate owned. You cannot edit this field from this screen, but you should have the value of the customer's homes listed there. As we continue to scroll down, the next section, we should have at least one mortgage being paid off. If the customer has multiple mortgages, they might not all be being paid off in our current loan, but the loan on the property that we are doing should be listed as being paid here in this section. As we go now to the next page, there's a couple areas here that we would want to make sure we are double checking. The first one that we want to make sure we are double checking is we click this Show All VOM option. And this is where all the customer's properties should be listed. If the customer has multiple mortgages, they should all have a property associated to them. So there should be no properties or no mortgages that are listed that should not have some sort of address or property listed here that it is associated to. As we go down to this lower section, we've got the customer's property information, 123 Main Street in Columbus, Ohio. This is the subject property, and this is their primary residence. The value here needs to match the value that we have on page 1 that I asked you to write down. This $275,000 should match the $275,000 that's on page borrower summary origination, those two values for estimated and appraised value. All three of these values need to make sure that they match up. You should then be able to click Attach and Show Liens. And on this page, there should be no mortgages listed here that don't have a checkbox. All mortgages that are listed here should be either associated to this property or not associated on this where you cannot see them here. If you open this up and there is a mortgage that shows up here that does not have a check mark next to it, that would deserve an email to the mortgage banker to get it corrected and make sure that all mortgages are assigned to real estate properties. Then we hit OK. Type of property, whether it's a single family or a condo, should be filled out. That should be defaulted to whatever the mortgage banker put in there for the type of property. And then we hit Close. As we scroll down to the next section, we're now looking at details of transaction. On the left side here is the mortgages we're paying off, our escrow deposit, and our estimated closing fees. On the right side here, you should see the loan amount, as well as then what the customer has coming to them for cash to close. So in this example, a negative number means the customer is receiving $261.87 out of closing. As we continue to scroll down, all of these declarations should be answered. One thing that you really want to make sure is correct is this: do you intend to occupy the property as your primary residence? If this was listed and the box was checked, and we'll go back to it here quickly, on borrower summary origination, if we scroll down, property will be primary residence. If this box is checked here, and we go to page 3, it needs to make sure we match that you intend to occupy this property as your primary residence. If there's a no in either one of these, there should be an explanation for that in the log comment, whether it's a non-occupant co-borrower or something to that effect. If you do not have an explanation as to why this is a no for either one of these, you would want to reach out to the mortgage banker to find out what's going on in that situation. So this is a key line L area that we want to make sure that is not being missed, because it can cause a lot of issues down the road if that is filled out incorrectly. As we continue to scroll down, this area here with ethnicity, it's all of our Home Mortgage Disclosure Act questions, needs to be filled out. So we need to have the drop downs as well as check marks. This section needs to be completed to the best of the mortgage banker's ability. And then as we go down, it should have the mortgage banker's information listed here. The next section that we go to is the 2010 itemization page. When this pulls up, this will go through all of the closing fees. So what we want to do as we scroll down, one thing that's a common mistake people might make is this section right here for loan origination fees might be blank. You want to make sure if this is blank, if there's no number listed in here, that needs to go back to the mortgage banker to complete an update. This should always have a number filled in. As we scroll down, we should now go to the section for appraisals. And to complete the appraisal correctly, the customer is paying for the appraisal up front and outside of closing. We need to log that on each application. So in order to do that, we're going to check the box next to appraisal fee. We click that box, and it opens up this menu. In this top box right here, we want to enter in the cost of the appraisal, which is $300 listed as the appraisal fee. So as you can see, the $300 here matches the amount that's being paid outside of close of $300 here. We then hit OK. There's also the appraisal management fee in section 808, which is $100. We need to check the box and complete the same option here for $100 on the appraisal management fee and hit OK. So you should see two boxes checked here with the paid outside of close amount being paid for by the borrower and the $100 paid POC paid outside of close by the borrower as well. As we continue to scroll down, there should be a lot of this stuff defaulted from the closing cost template. We need to make sure that there's a daily interest charge in here that goes through the end of the month. So if you can see, it defaults here. The closing date is May 1st, so it has 31 days from May 1st to June 1st listed there. As we continue to scroll down, we now get to the escrow deposit. You would want to make sure that these top two boxes are checked. The deposit for taxes and insurance should be checked here. So both property taxes and insurance should be checked. And there should be some sort of number listed here for property taxes and insurance. It's usually 2 months and 2 months, or 4 months and 4 months, or 6 months and 6 months, just depending on the mortgage banker and how they structured the loan. As we continue to scroll down, we now get to our title costs. And this is where the pre-HUD comes into play that we wanted to make sure was in the file right away in the beginning. We are going to make sure that the fees that are listed here and for the bottom section of this application matches the fees that we have on the pre-HUD. So we're just going to click pre-HUD received here, and it's going to open up a new window for us that's the actual pre-HUD. Typically your pre-HUD will look like this, and it's all by line number. So if you see here, we have line 1101, title service and lender's title insurance, and the total amount of those costs is $905. So the total that we should have on line 1101 on our good faith estimate and what we were just putting together should be 1101. Settlement or closing fee on line 1102 is listed as TBD, or to be determined. You would always use the default number of $275 for the closing and settlement fee. So what essentially you're going to do is you're going to take that $905 and you're going to subtract $275 from it. If this number, say, on a pre-HUD was $2,000, you'll take $2,000 and subtract $275 from it and input it into those two fields that we're about to look at. But in this example, the amount listed there is $905. So we're going to minimize this and go to our screen here. Now, settlement or closing fee, line 1102, like we said, is $275. If that is not listed there, what you're going to do is you're going to select this little Edit Field Value button. It will then open up a new menu. And in this section for fee, you're going to type in the $275. And then you're going to hit OK. That populates the $275 here. Now the total cost was the $905. So by taking $905 minus our $275 settlement or closing fee, that gives us a remainder of $630, which is what's going to be inputted in line 1104. So $630 plus $275 equals $905, which is the amount on our pre-HUD. As we continue to scroll down, we now need to fill out any of our government or recording fees. So if we go back and we pull up the pre-HUD, we scroll down and we look at the government or recording charges. It has the line number listed right there, 1201. Should have a total amount listed of $300. So we're going to go back to Encompass in line 1201. That total up there is $300. So recording fees right here, $300. That's where we're going to populate that. Now, in some situations, depending on the state, the customer might have transfer taxes. They might have city or county tax stamps, state tax stamps, anything of that effect. If they do, what you're going to do is go back to this screen. You've got transfer taxes and the stamps. You would just populate those dollar amounts in here as well. As we continue to scroll down, the last item is an electronic document storage fee. The system automatically defaults this on line 1302, which is line 1302 here. Here you can see all these line numbers should match up. When we go back, we would just select this drop down button here, and we go down to in alphabetical order to E, and we have electronic document storage. So we're going to select that. So now it's electronic document storage. We would want to make sure that the $49 is listed here. And then the last thing that you want to do on this page is you want to go all the way over here under the column for A, which is APR fees, and check the box. So like I stated, electronic document storage of $49, and then check the A right there. So this should now match everything we have. $905 here. We automatically assume a $275 settlement or closing fee. We have $300 for our recording charges, and we have $49 here for our settlement or closing fee. So now all of those fees match. The next thing that you're going to then go to, now that our closing fees are correct, is we're going to go down to the 2010 good faith estimate. The only thing on this page that you need to ensure that you do is this GFE date needs to be the date that you're drawing these disclosures. So again, I'm just going to select this and choose March 15th. That way I know March 15th, which is today's date, is listed there. And that's all that's needed to be done on the 2010 GFE page. There's only a couple more steps left to make sure that your application is correct. First thing that you're going to do is you're going to go to the Tools section. And once you click Tools, you're going to go down to the Net Tangible Benefit form here. This needs to be completed as well. So we're going to click Net Tangible Benefit form, and there's only a few fields that need to be made sure that they're completed. The loan date needs to be populated with the date the customer opened their current loan. The loan amount, which is the amount that they opened their previous mortgage balance for. And the original loan term. How many months was the original loan term filled out for? So January 1st, 2007, $265,000 and 360 months or 30 years. Now, months remaining could be filled out by the banker, as well as making sure that we know whether their current loan is a fixed or adjustable rate mortgage, and the customer's current interest rate. So really, this whole top section should be filled out. The only one that might be missing is months remaining, and that is okay. As we scroll down, loan purpose. What was the purpose of the last loan that they did? In this example, the loan that they did was to buy the home. So it's a purchase is what the purpose of the previous loan and the loan we're paying off was. But it might be cash out, no cash out, something to that effect. But we need to make sure we have something selected there. As we continue to scroll down, some of these boxes should be checked based on the benefit that we're giving the borrower in the loan itself. So in this example, we have obtaining a lower interest rate and obtaining a lower monthly payment as the two boxes that are checked, and that is fine. As we continue to scroll down, this bottom section needs to have something filled out here. Some sort of 1 or 2 sentence line that talks about what benefit the customer is receiving in the loan itself. So in this example, customer is receiving a lower interest rate and a lower payment. Once you get to this point, all of these forms here have been reviewed. Borrower summary origination, page 1, page 2, page 3, 2010 itemization, where we then matched up here this pre-HUD with the closing fees on the title section. 2010 GFE should have the date here. And then when we go to tools, we should have this net tangible benefit form filled out. Not necessarily completely everything that's listed here, every open field, but just the fields we described, the 6 or 7 fields that have to be filled out. Once this is completed, what you would want to do is do a compliance review to ensure that everything is accurate on the file. So you just click compliance review and go up to here and hit order, and the system will research it. Now, there's going to be several things in several states that might have specific things that need to be done that are different than what we have on this file in Ohio. There will be a list of those states, and there will be a video covering all of the issues that those states might have. So we would want to make sure that those are correct, because certain states have certain issues. In this example, it is giving me a warning. It's basically saying my social security number and things like that are incorrect. That's going to be true because this is a made-up customer. It's a made-up social security number. But you should receive a green pass up in compliance review. If you do not have a green pass right here, you would want to review what the issue might be. It might be something simple that you know how to correct just from the description it gives you, or you would want to bring this to myself, Brian Zemer, or Brandon Lee to review and see what the error might be. So once we do have this as a green pass, then we're going to actually draw the disclosures. Drawing the disclosures will be on a separate video. I'm going to break it up into 2 videos to make sure that we have enough memory for each one. But this right now, what we've walked through, is how you ensure the application is correct in completing the loan application. The last thing that you would always want to make sure you're doing is you always want to make sure that this loan to value has not changed and is still at or below that 80% loan to value. If for some reason that is above 80% loan to value in this type of a file, you would want to email that mortgage banker back and advise them that it needs to be corrected, that they're doing a conventional loan and it's supposed to be at or below 80%. So prior to drawing disclosures, you always want to make sure that this loan to value here is below that 80% threshold. If you have any questions, let me know. But next, you should watch the video on how you actually draw the disclosures and how that process works. And we'll walk you through what options you select to actually have those disclosures drawn. Thanks.